there, it's Vanessa of Property Tribes Forum, and you're watching Property Tribes TV. Thank you for joining this interview, and I'm talking to investor and landlord John Corey. And John, I think the subject of this interview, I want to call it Numbers Never Lie, because in property, when it all boils down to it, it's a numbers game in the respect of that the numbers will tell you whether you've got a good deal or not, what your net profit is, etc., etc. Do you think that investors place enough importance on the numbers?
Far from it. A couple things. In the go-go easy money days, people were trying to maybe cover the mortgage payments, and
there was that famous saying that it
washes
just
its
washes
face.
its
Exactly.
face. Yes,
and that was considered a goal.
Yes.
And I like to tell people, particularly in the UK, and there's a different ratio in the US, but in the UK, I say take the gross rent, take 40% off, and that's all you have left to service the debt with. So if it's going to wash its face, it has to do so with 60% of the rent you're expecting. The other 40% you're going to lose on property management, voids and vacancies, painting, all decorating, letting fees, utility bills, council tax during voids maybe. You will consume a tremendous amount of the income just on the running costs. And if you can't service the debt with 60%, you probably can't do the deal.
No, I'm inclined to agree with you. And at the acquisition stage, I've always used a deal stacking calculator, and I will stack deals before I even walk out of the front door to go and look at a property, because there's no point in me wasting my time going to look at a stock if it doesn't work financially. So is that something that you advocate as well?
Well, when I got started back in '83, there was a book I read called Nothing Down, which talks about creative finance, and one of the things that sort of was associated with the book, because it was in a second book the author wrote, was a score sheet. And if you didn't score above a 12 out of 15, you wouldn't even go look at the property. Now, you have to understand, this is back when they didn't have cell phones, so when you left the room, you were leaving the phone.
Yeah.
And if you're going to be off the air, so to speak, for the hour, whatever it takes to go look at the property, you might miss a big deal. So you didn't go look at properties that didn't stack up. I also started, and I have a copy now on the iPad, with an HP 12C calculator, which you hand calculate the numbers, and it's a financial calculator designed for the real estate industry. And yeah, if you don't get the numbers to work, you can do the loan calculations. If it doesn't cash flow, you either need a lot more money in the deal, or you need a partner who's going to put a lot more money in the deal, or you need to walk away.
No, I totally agree with you.
It's as simple as that.
And as my husband Nick always likes to say, you know, sometimes it's more powerful to say no than it is to say yes. And there are thousands of deals out there. You'll always be able to find something, and you shouldn't get sort of emotionally involved in it and, you know, just get into a sort of adrenaline rush of doing the deal. Because I have been guilty of that myself, I hasten to add, and it's not worked out well for me.
There's a phrase from at least a long time ago. If you buy negative cash flow deals, which means they're really not covering all their expenses, you basically bought an alligator.
Yes.
And if you can't afford to feed that alligator, it's going to eat you alive. So why rush into a deal that's basically an alligator, knowing that you're going to blow up later? And in this country, if you blow up, you might be chased for 12 or more years. You've actually gone backwards 12 years in time, so to speak, when it comes to what you're trying to get to. So, yeah, know your numbers. And be very careful about garbage in, garbage out. If you believe crap numbers because some deal promoter wants to tell you, oh, it'll rent for this and you'll get that value, and it doesn't, they're gone and you're left feeding it every month.
Sure.
So do your homework, check online, check other people, ask questions, and be realistic about what those numbers are. And if you don't know what they are, take 40% off, plug in a realistic interest rate, not today's low bottom Bank of England base rate. Do something real, see how it's going to cash flow. If interest rates go to 5% and there's a 2% margin, and this property won't stack at 7%, what are you going to do in a few years?
You should be stress testing it, definitely. Yeah, and I think you made a very valid point that the numbers are only as good as the inputs, so that then takes us onto a completely new subject of due diligence, which we'll save for another time.
Yeah, there's a whole, and what's funny is over time when you do the due diligence and you start running some of your own properties, you start to understand what things really cost. So though I'm saying 40% might be a little higher, might be a little lower depending on the property, and you got to look at your actual data. And some properties you realize they're just expensive to run, some are actually less expensive to run, and it makes a big difference in the end of the month and the end of the year.
Absolutely, and if you haven't got any cash flow, you ain't going to survive long term to benefit from capital growth if there is any. So you've got to be absolutely clear on what your cash flow, your net cash flow after all expenses is going to be.
Yes, and there is a trap that some fall into is they want to go for interest only because they want to minimize their taxes. And I said, well, for every pound sterling you're spending on interest, you might get 40p back, you might get 20-something p back. You still spent the whole pound. So just because you didn't pay any tax, that's not necessarily a good sign. In fact, it's going to hurt you when you go for a loan because you're not making any money. So you're running a business with no profit. Focus on profit, focus on cash flow. Be very careful about trying to zero out your taxes because it probably means you're barely breaking even.
Very good advice there. Thank you very much for that, John. And as we said, the numbers don't lie. There are very simple deal stacking calculations that you can use out there. I've put some on Property Tribes that you're very welcome to use. Check your numbers and make sure that you are getting positive net cash flow at the end of every month, because if you're not, it is not a deal. Thank you for watching Property Tribes TV.